Hello everyone, welcome back. In our previous lecture, we have covered the third limitation of accounting principles, and during this lecture, we are covering one of the accounting scandals, which is the fallout from Enron. Due to many accounting scandals, it is often very difficult to trust the activities of accountant and auditors. And during this lecture, we'll look at what happened with Enron. Enron is one of the prime example of accounting scandals. It was originally a natural gas transmission and distribution business, but it gradually expanded its business in energy, commodities, and service sectors. In mid-90s, financial analysts criticized Enron because of its high debt level. But the management of Enron managed those criticisms aggressively. Enron growth was really high, as many analysts recommended to buy Enron's share during 2001, but the fact is Enron's assets and profits were inflated, or in other words, there is no existence of assets and profit of Enron. Enron sold its assets to buy back its share, which also helped Enron to increase its share price. In the meantime, debt and losses of Enron were gradually increasing, and Enron shifted those debts and losses in offshore entities. And these things helped Enron to disappear its debts and losses in the financial statements. So from the financial statements, it was not really easy to recognize Enron's debt and losses. Now the question is how accounting was involved. So how did the auditors miss it? Enrons were really aggressive to manage everything by bullying the medias or analysts. There were also problems with accounting loopholes. All the frauds made by the Enron was really sophisticated. It was made from its top management. There are also conspiracy by executive management team. It is also seen that external auditors of Enron also worked as internal auditor. So the question was the auditor independent? Was the independent audit compromised? The fact is, if the external auditor also provide the services like internal auditors, we can say that external auditors cannot work independently. There are also some other consideration. External auditors are paid by the business. So when auditors are paid by the business, though they are external, they are indirectly forced to work for the organization rather than highlighting the true fact. And this is why auditors are often questioned with their professionalism, and these things are also true for Bangladesh. In many cases in Bangladesh, we do not trust the auditors, that means the CF firms or other auditors, because all the CF firms or auditors are paid by the organization, and when the auditors receive their payment by the organization, they indirectly are not allowed, or indirectly they are not free to work properly, and this is why there are many scandals in Bangladesh as well, and this is why accounting profession in Bangladesh is also questionable. However, the things are improving in our country as well. Enron's auditor was Arthur Anderson, and its performance was criticized by media, regulator, and auditors. Despite being cleared, its impact of scandal ultimately destroyed the firm, and the Enron's auditor, Arthur Anderson, agreed to surrender its CPA license and its right to practice in 2002. So from this lecture, we have learned that it is often questionable with accounting integrity, with the activities of the auditor. So it is not always easy to trust the figures which are made by accountants and which are audited by the auditors. Though financial statements are certified by the auditors, but it is still questionable whether we can really trust the accounting informations provided by accountants and certified by the auditors. That's all about this lecture. In our next lecture, we'll look at accounting scandals 2, which is earnings management.